This quick midweek update, taking a look at the charts as they applied for analysis to stock picks. And the first one I'm looking at of several on the watch list um, is 22nd Century Technologies. The reason it was brought to our attention um, simply is the spike in volume. If you look at the lower right-hand corner, I see 2,000, 1,500, and 1,000K. You multiply 1,000K by 3 zeros, which is the K, or 1,000, and you have a million as the number of contracts bought. We're talking about contracts bought, and we're looking at the first bar from left to right on the bottom, starting on the left, and we're looking at a green bar followed by several red bars. So what do we know? We know unusual things happened, mainly because, as far as we can tell, almost 2 million people purchased the stock, and in the subsequent bars of volume, we see what amounts to maybe 1.5 times the number of contracts bought um, as sold. So let's imagine what that means. It means when the price made it as far up as it did at the far left, where the volume, spike occurred. People who owned the stock will say they owned it when it was at about $1. Realized that in these times, in this economy, making over 50% of return on your investment um, is a happy day. So if you look, what happened to the price? The people that ended up buying at the beginning of the day are stuck with it, whereas the people that had owned it in the previous weeks realized 50% gain. So if I had invested 5,000 to 10,000 prior to this in the stock, I woke up Friday morning and I noticed the stock had increased by 50%. So my $5,000 investment was worth 7,500. It was 2,500 profit overnight. 50% gains resulted in massive selling. So look at the chart on Monday, 9:30 a.m. I said, this stock is on my watch list. It's on my watch list because I noticed a lot of volume in the stock, and so I received what's called a text alert from my buddies at Merrill Edge that told me on Monday morning there was unusual volume on Friday. That unusual volume made me put this on a watch list. So I said to myself, okay, let's look at this chart. What's going to happen to this stock over the course of a week? It's likely going to go up. It's on my watch list. So we'll just look at how it did. And I scrolled all the way to the right. This chart, what I'll tell you is the stock recovered to the price of about $1.60. So if we had bought it on Monday morning, when I'd indicated this is going to be on my watch list, we bought it probably around $1.40, it went up to $1.60. And if you do the math, 20 cents on $1.40 is almost 10%, I would say. 14 cents from 140 brings it to 154. Another 6 cents or 5% brings it to 160. So we'll say a 14% increase from Monday morning until Friday afternoon. What is that? If I'd invested $5,000 at the beginning of the week in this stock, I would have realized what amounts to $600 or $700 in 1 week. That's not to say the stock is not going to continue to previous highs, because that's what happens. When analysts talk about stocks, they look at previous highs as the next potential, what we might say is a pivot. We'll talk about pivots a little later, and thank you for watching this thing.